Welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Welcome to the Tuesday. New high, I guess, we got in the markets today. So we have hit our high for the first week of May. Looking good. I do like the way the market has made a nice good displacement up to the upside. And I want to see a nice big drop down. That would be the perfect time for a nice little May 1st run. I know a lot of people are saying, hey, look, you don't know it's not going to go higher. No, I don't. You're absolutely right. And right now it's still bullish. So until we have something that shows us that we have a change in market structure, or we have so for me, if we want to see this change in the next few days, I want to see this break down below this busy and take out this bear candle right here on the downside. It's a breaker actually, because it's a small little high here, takes it out. So as soon as this breaker gets taken on the daily and we get a retest of this level here, that's what I'm looking for a continuation on the downside. So that'll be the turn that we're looking for, because nothing else seems to be setting up here. So these were these upside objectives. Oh yeah, remember the other day we're looking for 28.45. That was my upside prediction. Look how close we're getting. That was the standard deviations that I was looking for from down here. So 28.045 or 047.75. So one more little push up. I'm going to put that one in here because I'd be interested to know if that actually hits it. 47.5. Okay, so nothing on either chart right now. 5 minutes, no reversal yet. There's a small little change in direction right here in the 1 minute. It's continuing, it's taking out the low. Come back into this candle. You want to see this candle hold price and continue to drop lower, targeting 62% of that small little range, and then the discount box. It has been quite sloppy, but it's still on a turn, still bearish right now inside this 1 minute. So until we break above this high, we're bearish inside here, and we start to get more bearish the moment the 5 turns and the 15-minute turns. That will be here and here. Good morning, Adit. How are you this morning? How's family? Daniel, your wife, how are they all doing? Hope everybody's fine. Hope everybody's doing well. And whoever else just tuned in, pop in, say hello. You don't have to sit in the background. Say hi. All good. That's what I like to hear. All good. A little nervous today. not gonna lie, a little nervous today. I have to head out and see my mom tomorrow. That's my next adventure. Go see you there for my mom and my dad. If wait to see how the surgery goes. So we'll see. I'm a little nervous about that, but that's about it, really. Thanks for asking. Peter, hey Peter, how you doing, man? How's the healing coming along? How's the back? I just want to stop in and say hi. I have to have surgery to remove the fusion hardware this week, and then a bigger one later. I hope they're able to hang out more when I'm healed from. What? They're removing the hardware of your fusion? Did they say this was going to be temporary? Wow. Seriously, wow. It didn't take. Oh my God. Oh, Peter, man, I'm so sorry. So sorry. So that means they have to fuse higher then and put bigger, longer bar in there. Oh, shit. Peter, so sorry to hear that, brother. Wow. Oh. I'm so sorry to hear that. So what do they plan on doing then? Do they plan on going in for like a higher fusion and bigger bars to fuse over a larger area now? Yeah, we miss you too, man. Well, I hope everything goes well. I hope the surgery goes well. Oh, damn, that's crazy. Keep the mind focused on something positive. And when the new hardware comes in, imagine your body accepting it like a new visitor. Welcome the new visitor. Have your body accept it as a gift. You'll go through all that mental change that as soon as they put the new hardware in, that your body accepts it, man. I feel bad for you, buddy. But we're all hopeful. We're all behind you. Hope it goes well. It will go well. Absolutely will go well, my friend. Higher and lower. Yeah, I figured as much. But mind and heart is good. Yeah, I've never fixed my legs either, so they have to go lower. Try and stabilize that better. What levels are you getting done? Nothing but love, my friend. Nothing but love. Well, we wish you well. Sending lots of love to you, Peter. Good luck, my friend. You'll do very well. As soon as they put the proper alloy back in there, your body will be all ripe and ready to go. They haven't confirmed what levels yet. It will for sure be the last two cervical and all the way to the lumbar. They're doing the whole thoracic cavity as well? Last two cervical. Lumbar, yeah, they think just putting in what they used to use for metal would be better for me. I just can't get certain scans and stuff done afterwards. Why is that? I've got artificial discs from Germany. I got fusion from Canada, and there's not a scan I haven't been able to get yet. I've had CT scans, MRI scans. I'm not sure what type of scan would you not be able to get? Did they say? I don't know. That's what they said. That's interesting. I know it creates a lot of, if you look at a scan, it looks like it's just glowing because the radiation or the rays kind of look like it's like a glowing stick in your neck. That's probably why they're saying you can't get certain scans, because x-rays are hard to see past the glowing. They have to adjust some part of the machine to try and make it as clear as they can. Otherwise, it's just bouncing around and it's obscuring a clear vision of the structures around it. So I understand it does create some artifact inside the so I get that for sure. Yeah, like currently there is no distortion, at least minimal. It must just distort worse. Yeah, that's exactly what it is. Good morning, Hans. That's probably why they went with a newer alloy, because it doesn't distort as well. And then the old stuff does. I'll let you guys get back to it. I just wanted to stop it and send love right back at you there, Peter. Good luck, and keep in touch, hey? Let us know how things are turning out. We're all rooting for you, hoping everything goes well. And I'll pop in when I'm back from my mom's surgery. I'll pop in and check up on you. When are you going in for this? I will. This one should be a quick 4 weeks. This one is Thursday. So you're going in tomorrow. Wow. Okay. Wow. Get it done, man. Let's get on with it. Let's hope your mom does well. Thank you very much. Thank you. I don't know what's going on, but I'll send some prayers our way as well. Thank you very much, Peter. And we'll talk again soon, man. All the best to you. All the best to you and your family. Wow, that's going to be pretty rough. Sending the love, my friend. Lots of love. Okay, well, we got some things to direct some nice positive energy at now. So I like this this candle here. After seeing the sweep, the first downward candle to the left, as soon as we break that and come back to it, I want to see that roll over and go lower now. If we break the high of this, you've got the low and this Sibi. So unfortunately, you have this whole area to play in, but it's been worked so much. I don't want to see it now break this high. Otherwise, we're starting to look at potentially running back higher. And this is such chop right now. It's not worth playing in. Wait for something cleaner to set up, like breaking through here. Nice displacement candle we're looking for here next. and that displacement you want to see take it higher. If you look at the whole range here right now, we're not really seeing much of a 50% retracement yet either. See, we haven't even hit that. Let's go through some of these other ones. This is another good example of a Model 2. I guess it would be a model. Yeah, this is Model 2 here. So inside this larger range here, you see this first candle to the left after a sweep. It hasn't created much of a turn here, so you can use this one or this one. Let's say we'll stick with the one we usually do. Body breaks above that high, you come back and you tap it right here and send it up above the highs. If you want to use the highs, wait for a body to break the high, come back, tag the highs. The mean threshold of that candle is what you want to see hold price, and then send it higher. We're targeting the premium array above us. We hit it right here, a couple of wicks. Then all of a sudden you see it pop through it. So now all you want to see is a retracement back into this candle and this candle, because the body breaks this high. Next candle comes all the way back down into the mean threshold of that candle. How many times I've told you that? Look at that, with precision. And then you want to see that leave with some sense of certainty. So it leaves and does not come back completely. It takes off from there. That's the data point we're looking for. And I've explained this to you many, many times. So as you see that, next thing you're looking for is the target above, which is this next BISI above us. We hit it right here. Now you want to see a retracement back inside it, and you don't want to see the downside get broken. So as soon as you see it trace back in, you think, now I can load in 1, 2, 3 right here. And look at this, all the way back down. Data point. You see that? Look at the bodies respecting that right there. Supports it. So you have all 3 levels loaded on. Even give you a little hair down there to kind of freak you out a little bit. Like, oh, it's turning on me. Those are the ones that actually will take a lot of traders out, because you just go, oh no, it's trading against me. I'm on the wrong side of this now. You see this forming and you go, I've taken out these lows. It's hit right inside of premium box again. I want to see a Model 3 level now. I want to see this range extend. So we broke above it. You come back inside there. That's a Model 3 extension. There's your extension. And now I want to see a Model 4 continuation. So I want to see a body trade above here, come back, tap it, and send it up higher. Look at that. Boop. Comes back, gives it a little tap, and that's a Model 4 extension. Okay. And that's one of the 1, 2, 3, 4, 5, 6 different levels that I can retrace back into. And that's one of those early ones. So if you do, you put low leverage there, and then the higher part of your leverage happens down here. Your stop loss would sit just below here. So that's quite a ways. So if you're putting 1% on that, from that distance, it's probably going to be very small leverage. As soon as it takes out the high, pay yourself or move your stop loss to break even, and then wait for the reversal. So as soon as you see this little structure shift here on the downside, right here, see how we close below it, come back in and tag it perfectly. Data point, sends it lower, targeting the mean threshold of this candle, and then looking for a run down into here. All the time we don't break this candle here on the upside, because we've got a little swing and there's a little change in direction right there. We traded above it, we traded back into it, got a little bit of a wick, but no bodies have broken it yet, and now we're running back higher. mean threshold of that last up close candle. If we break through that and take this candle out on the upside, I'm looking for the high and the mean threshold of that candle to continue pushing higher. Does that make sense? And that's exactly the same on any time frame, any asset class, anything. You go back through the charts and look at it. It's there all the time. Small little swing here. Nothing. You don't get access to this one. Sends it higher. Premium array. You close all the way through that. Body trades above the SIBI. So here's your first one. Trade above the body. Right there. Come back. Give it a little kiss. There's your first entry for a long. Second entry. Right there. Waiting for it to break the high. It does. Come back into it. Targeting the premium. Premium gets hit. Trades through it. Comes back into the premium. Sends it higher. As soon as it takes out the high, pay yourself. Pay yourself. Institutional order flow entry drill. Continue. Change in direction. Right here. Trade back into it. Pop, pop. A couple of times. Send it lower. Takes out the lows. Wait for reversal. Reversal's here. Trade back into it. Now you want to target this little tiny guy right here. Take out that premium or that bull trap and then send it higher. If this holds, we want to see this break to the downside, get used again as support, and continue to push through this level and start targeting the area down here that didn't get a chance to get hit yet. So far, so good. Gold. We did not take out any lows. Bodies came right into this discount box. Wait for this discount box to get broken again to the upside and this side here. You don't get a chance to get in on that. Runs higher. Takes out the premium. You don't get a chance to get in on that. Wait for this to get taken. It closes. Just taps above it right there. Look at the high of this candle. You have to be quick on this one. 45.81. Look at the close on this one. Close is 45.81.6. Look at the low on that one. 41.81 or 45.81.4. The high. 41.81.5. So it just comes down one tick into that. Tags it. Just closes above it. One tick into it. And then goes higher. Did you find it? Did you take it? That's how precise it can be. When it's on a run like that, tick, tick, and then keep going. You're looking for this premium level here. Didn't get it. It's still running. So now we're looking for this, a retest of the high here and this last two candles. It's mean threshold. So a 5 minute, looking for a retest of this candle here. So that'll bring you back into here. Candle to close, 5 minute, get your confirmation. Silver. That's a good example of when you're on the wrong side of it. Right here, see how we closed above that level? You go, great, I just want to see the mean threshold of that get traded to right there. And you go, oh, it has to leave from here. So it starts, it leaves, you pay yourself at the high, then all of a sudden it comes back to you and takes you out. So if you pay yourself at the high and move your stop loss to break even, that's the rule. You would have made a small piece out of that and were on the wrong side and it came all the way back down and took you out. Depending where you put your stop loss and depending on whether or not you use that rule of that mean threshold has to hold right there, it closed right on it and then just went straight up first and then went down. So if you put that stop loss just below the one tick below the low of that candle and you paid yourself at the high and moved to break even, expecting that to go higher, and it reversed on you, then you go, good thing I followed that one simple rule of pay yourself at the next high. Gold just gave you that entry right there. So the high's taken, comes back into it. Model 4, continuation. I just missed it. So 2 minutes ago, I would have taken that. We talked about it just before it happened and then went on to something else and it came back and did exactly that. Pay yourself at the high, move to break even, let it buck, and that's where I'm looking for a target up there. 45.93. It happens all the time, man. All the time. 4 models to rule them all. Little piggies, they're coming back into this right here. This is a graded response. That is 50% of that range. Right on the money. Right on the money. Little piggies. Now I'm expecting little piggies. If you're loaded on to watch for piggies to run higher, it's already hit its target right here. So I want to see the piggies start to move up higher now. We have a break above the high. We've come back to this and this. 50% hit that on the beezer. I want to see pigs go higher from here. Leave this open. If you start to lose, go into a C level response and a D level response. The D level is the midpoint of that candle. That's it. Your stop loss should be sitting down here. Does that make sense? So that's the scale in 1, 2. I wouldn't even put a 1 in on the third one there because I wouldn't want to see it get down that low. You want to see this stay open for that to go higher. But just below the mean threshold of that candle is where you want to be. Soybeans. Low taken. Body swings well below it. Come back up. Tag it perfectly. Data point. And then send it lower. Retest. Extension. Model 4. This is another one of those little one tick below. See how we've opened below this level? Open, tick, and then send it lower. Crazy. Okay, so Euro USD. Got nothing in here until I see a nice little structure shift here. This is consolidating. So you want to see this bull trap get taken to the upside, and then I'd start looking for that first new week opening gap. Again, I retested that. The pound and the euro are pretty much doing the same thing. So immediate rebalance. I want to see if you can get above there. I'd like to see this area here provide support. So I want to see this have a nice bold candle above, finish up here in the next 45 minutes as a nice bold candle, create a little fair value gap there, then do an institutional order flow entry drill for continuation on the upside. So watch this rejection block at 135.60 and see if it taps that and freezes there. You don't see it tap it and rip all the way back down again. So if it just taps it, freezes there, then does a little pop up to 25% of this wick, comes back down in the next hour, gives us the institutional order flow entry drill, which is a tap off of here. If you take this, we can reverse engineer this. Let's see if this works. Oops. As long as it stays above that point right there, 135.52, you want to see it up there and come back down and tag that. So you don't want to see anything get bigger or lower than that, not even a wick on the next hourly candle. And then the following hourly candle, 11 o'clock, come down, give it a little tag into this area here, all the way down to 135.5, and then send it higher. That's what I'll be looking for. So I'm going to leave that there. We'll see what happens when this hour closes in 44 minutes. Be interested to see how that works. We want a nice little displacement candle here. We want a fair value gap to form in here now. An interesting example of it goes from discount to premium all in one candle, closes above it, then the very next candle taps it, hits your premium, and then sends it through this level. And then we're looking for that level to let go. It does. This level's respected right here, and we tend to push higher. looking for a range extension. There's your extension right there, just popped up above it. Model 4, and then the next range, model 4, sends it higher. Now I want to say change in direction here. It changes below here, trades back into it, sends it lower. Look at 50% of this range. Looking at those last two up close candles. Midpoint held. Lots of bouncing around inside there. Wait for this candle to the left here. Trades above it, comes back inside it, sends it higher. Premium levels, trades right through them. See how it goes through one. Is there a little one there? Not sure if there's a little one there. Right here, and this SIBI closes above that high. So now we're looking for this high to get retested. It does right there. Perfect test, and then sends it higher. Model 4. All right. Minutes or so. It's this. When you've got an overlap like this, you want to see a body get above here and a body get above here. This, you want to see support price going higher, and you want to see this confirm price wants to go higher, and use these two levels as a retracement to go back higher. They're deep, so you have to put minimal leverage on that. You get no retest of this, and it continues going higher. Takes this one out here. This is the only one you get for an entry for a run higher, and I think that's above 50%. Nope. So there's your discount. Send it higher. As soon as it hits 50, move to break even. 62, pay yourself, pay yourself, pay yourself. Comes back, takes you out. All in the next 1 minute, 2 minute candle. You made your profit. You hit the premium level right here, and you're done. Now you wait for your next opportunity. And that's quick. That's like boom, boom, boom. But that's how you juice the orange, man. And the Model 1 is a very safe way to protect your money. March, April. Now we're getting into May turn. So he's looking for a nice little deal down here. So I don't know if Russell's in here or not. Yes, you are. Okay, good morning, Russell. This would be a nice little July pickup. Unless this ends up being the next price leg higher in June. This would be nice to see this drop all the way down into here and come right back into some of this imbalance down here and pick that up for $8, $8.50. at 12%, that would be closer to 15%, 16% return on your money there. So that's where you start looking for a deal in July, August. If you've done your run up, take your money, move to the sidelines, wait now for the July swing point, grab it, and then you got a long-term investment to hold on to at a real good discount. Come on down, Disney. We've hit the premium again. See how we come back up? I want to see that run through here and take out this guy. If it takes out the midpoint of that candle, then I'm looking for a run back into all this and hopefully get us right back into that $80 or $90 range. That'll get you 10 to 20%. The dividend's only like 2% in Disney, so not a great dividend stock, but it's nice to catch a nice low, get a 10, 20% return, and then just get out. Reversal right there, going lower. April into May. Markets are starting to show these little turns already. God, I remember when Michael was telling us about Roku. He says if it comes down to 18 bucks, I'm buying lots. And I think it went up to like 400 and some odd dollars. I think at some point it was like crazy high, yeah. It was way up here. When it first came out, back when he was telling us about it, he says, oh, I want to pick that up for a song. They were $16. He picked it up at $18. He was telling us about this at 18 bucks. You can't ask for a nicer low than that. And it never came back. Once it came back and retested that 18 bucks, because it went up to here and he was like, if it comes back to 18 bucks, I'm going to take it. And I think it, did it get back there? 1860 something, yeah. And then it finally left and he grabbed that. You think about 18 and I get up to 480 bucks. Imagine if you would have put $18,000 on that way back then. And he told us about that just before it opened up. And then when it happened, I bought it at 20 bucks, sold it at 30 bucks or something like that. And that was it. I chickened out, but I look at that now and go, jeepers, look at it. You get hammered on that. Even if I just left it through all of this, it'd still be worth $127. Anyway, life is such. Closed above it, tagged it, sent it up. Look for this to get broken to the upside and that mean threshold to let go. You want to see this pop up here. If you're going to get in on Tesla, you want to see a body break above here, not just these wicks that pop up. You want to see a body break above that. Come back, use this as support. UPS, look at that. What a drop. Welcome to May 1st. It's the April run up and then hits May. Crazy. Body closes above it, comes back, tags it, sends it higher. Pay yourself at that high right there. Move to break even. Zero stress trade. Zero stress trade. This is your one, Russell. You gotta wait for it to break above here. Alrighty. There's the premium level right there. Let's see if this just keeps bouncing around inside here till 7:30 Canadian time, 9:30. Let's run out these highs. Look for this target up here. Rejection block. Tap this. Send it up. Mean threshold of both of those candles would be about here. There's the open. Swept that. Let's see if we keep pushing a little higher now. Wait for structure shift below here. If you're looking for this, just a clearing out both sides of this market. So you've got the engineered liquidity above and below, and we just ran out this stuff here, and you've run out the high and low. So now you wait and see what kind of chop it's going to deliver. Morning, Derek. Morning, Lucas. How you doing? How's Vancouver? I heard you guys been getting some nice weather out there. It was like 26 degrees yesterday, I see. I went outside, I was standing there. A couple of snowflakes came down this morning. I was like, oh, you gotta be kidding me. Come on. It's cooking. Nice. Be nice to be zipping around Stanley Park right about now. See, Baron goes ripping around there on his skateboard. He's got a dog that's nuts. And that dog's got so much energy. It's like one of those Australian sheepdogs. It's like a collie, these beautiful little blue eyes, and it is nuts. As soon as he gets on his thing, he just barks and takes off. Baron just stands on his board, and this dog rips him all around Stanley Park there. It's the only way to get that dog to get him tired. It's just so much energy. Oh, you got water restrictions already, eh? Wow. Nice. It's going to be a rough summer, man. From a fire perspective, that's going to be nuts. Okay, so again, I'm looking for this 2847. That's my prediction for one of the standard deviations. I can't remember which one it was. It was down here somewhere. That's got to be 2.5, 3. That's like 3 standard deviations right there. Ba-boom. See what kind of reaction we get on it, or whether or not we just continue to drive through. And we are. Interesting how it opened and closed on the same level. I got a nice little retest off of gold. Chances are, though, this might get turn on us and go lower. This is going to go higher. It's got to go from here. So I'm looking at gold right now. It's out, yeah. I wanted to see if this held, so started running back up, but then we've got below this level, the displacement, hit it. So you got 2 different directions. 1, you wanted to see that go higher. 2, you wanted to see it come lower. So I wanted to see it go higher, and it didn't. It bounced off there. That's why I moved my stop loss tight, just in case it decides that that's actually the change in direction and we're going lower. So these are your next targets down here. So now I have to wait for it to get back above here for that to go higher. So watch here on the 15-minute and the hourly. See if that stops there. We hit the wick. The bodies respect it. That's it. I'm going to go short there. Shenanigans with some of those wicks already. I don't want to see a wick is starting getting up in here. You get into that mean threshold. We're already through that already. So this hopefully is just some shenanigans with the wick. We'll see where the body ends in a couple of seconds. As long as it stays there. No, it looks like it's going to reach for the rejection block there. And that's a 40 candle. So if that one holds right there, and we see a 40 wants to take the high, it'd be nice if it just stuck right there and didn't go any higher. And then the 41, 42 kept coming lower. It wants to run up there. You can just feel it just wants to run up there, hey? Yeah, it's going to pop through. That's going to keep going higher now. So body broke above it here. I wanted to see it hold here. It came back, just tagged inside here and went higher. Took the high, pay yourself at the high, move your stop loss to break even if that's the reverse. It's not going to wait for the macro. As soon as you see 40 get broken, 41, 42, 42 is a high-low candle. If you see the previous one and the next candle that's not supposed to be a high-low, it breaks it, and then you're looking for a continuation. $15-minute continuation model. Yes, that's a nice little A-level entry right there. Institutional order flow entry drill. Send it up higher. You didn't have to worry about it coming back into 50%. What on that? Let's have a look at that GBP that we were looking at. 17 more minutes. See if that closes above there. There's the retest. 1 minute. Send it up now. girls on the way to. It's a nice little tag there, send it higher. Yeah, that regular trading app makes you wonder if this is all just a Judas swing higher, right? And then all of a sudden they're going to give us a quick reversal back into this regular trading hour gap. So looking for any sign of a reversal. Indices are out of sync with YM. Holy smokes, yeah, they ever. What is the ES up to? You want to see this breakdown out of here. Wow. 12 minutes, if that closes above here, this could be a bigger push higher. ES could start running for its all-time high as well. We'll see what the next 12 minutes holds for them. This one watch here now. There's the first one. Watch, wait, time and price, remember. The macro is about to begin. Nothing yet, still going higher. Macro starts now. $120, $221. Good morning, Paulette. How are you today? How's Paulette today? For sure. Be right there. We below here and we cleared out that there. That would give us some support. Let's see what kind of wick the damage this wick is going to do here. Because that would be a change in direction right here. And then a continuation again to the upside. See, I'm on the wrong side of it again. So I gotta be right there. Chase that thing down now. And then I'm gonna get my money back. Go long on that. So let's go just below here. So you just got to get back in sync. If that crosses over me again, then you got to wait for market structure shift. This is one of those bounce around ones that you can get hammered in. So we'll see if this holds here, keeps going higher. Yeah, you've got to return back into here. That should have taken me out for sure there. Nope, the little bastard is going lower. Switched it up, went higher, went lower. Wait for a structure shift here. You're gonna have to wait for these two to get taken now. Wait for this 5-minute one to get broken below here for confirmation. Come back, retest it, and then start coming lower. The news at 10. See how it's crossed over it, over it. You gotta wait for something to break above and below here. So yes, up to. Oh, now we finally popped up there. Yes, you're above it. Retest it. I want to see that keep going higher here now. ES should take it higher. NQ should go higher. If ES is going to follow here, this level is 72.78. I want to see that get taken now. And then start pushing this for the rejection block. 72.93 and then higher. It's quite choppy. Just wait. Make sure you're patient enough to wait for your opening. Watch right here. You're above it. Coming back in to tag it here. See the mean threshold get broken. See how it's that data point's hit. And now we're back. We'll bounce around between these two. I want to see this get some support off of here now and start pushing higher. Just bouncing around on there. Requiring a great deal of patience. Do not enter, but nothing good to clear for me. It may be late morning run. Yeah. That is super sloppy, man. It's still bullish on a 15-minute. There's nothing on a 5-minute, and there's nothing on a 1-minute. That mean threshold sure is holding price back, though. It's banging on it, holding it. Well, not what we expect this morning, eh? You still want to see this go higher on a 15-minute. That's a nice little graded response, institutional order flow entry. And you want to see that start going higher. So wherever that low is there, you don't want to see that broken again. Ideally, you don't want to see this broken again either. And there we have our little wicks and tricks. Gonna go check out the bees and come back more around 11. In case it moves beforehand, take care. Good luck with the bees. That was Phil saying goodbye to me. There's the 5 minute. That's the midpoint of this here. It's right on the 50%. See if it turns here. We start eating through that. Be careful, Hadi. If that gets broken to the upside, you got a little imbalance right here, overlap. There's no reversal on the 15-minute yet, no hourly. Let's look at the 5-minute here. This is 15. Yeah, you could get something there, Hadi, if that reverses now. There you go. It's the retest of that no-go zone. You're risk-free, good for you. Swing, first candle to the left, break through it, come back to the mean threshold of it, send it lower, take out the lows. There's one tick below those lows there now. You're back inside this one here. Out. Don't like it. Small gain. It's a good run, Hadi. That's a little pop in there. There's a little bit of a shaker coming back up there, but at least you got to run down to the first presentation on the 5 minute. Yeah, 15 minutes bounced right off of that 50% of the SIBI. That's a nice little B there. If we can get back above here and use this as support, and then on that swing, the next one, the next one. So you're looking for a step up here. Smart move. Better to wait for take a little bit of money in your pocket and wait for a better setup. That's wise, people. That's what you got to get to the point where you're looking at that and saying, wait for your entry. When there's a high probability it could turn on you, then wait. That's when you start to get up into that professional level of trading, when you can make decisions like that and say, all right, I'm going to wait now and see how that 50% is holding. And if it takes out those highs there, there's a nice little entry. There's a B level entry on a 15 minute for a continuation on the upside. Now, when you look at these lower time frames, you start to get really nervous about that, right? So watch for a retest of this here, right there. We're going to put 3 in there. Then your stop loss has to go down below here. I want to see that mean threshold hold price. If we eat through it, we're coming back to retest this again. So I'm just below that SIBI there now. We could come back after we have this little breaker. It takes itself out here, takes that little high out. We can come back and retest that as well. Mean threshold of that. So I don't want to see that one get taken on the downside. If it does, then I have to allow for this and then that mean threshold right there. Let's see if she launches from here. There we go. No, it's broke that high. I'm going to pay myself one there. Let the rest ride. Risk free. So that's a level 3. Pay yourself. And then you move your stop loss to break even. Now level 4 would be coming back and retesting this or retesting the highs. No more than the 50% of that. And send it higher. Now I'm going to move to here. Because that I want to see create a fair value gap there now. So there's 120. Now we're looking for that 221. See, Russell, can you see why this one was chosen for that first swing? You look for the first candle to the left, body trades above it, you come back into it, send it up higher, pay yourself there, and then let the rest run. Get yourself to break even. You have to trust it or see it enough to believe in it. And if you don't, then you got to watch it some more. Institutional order flow entry drill. You want to see that stay like that, leave this open. We've traded above here. This is the graded response. I don't want to see it come back and fill that, because then that means it's going to come back through there and then risk this being a turn in the market structure, or like a turn again after hitting that 120 level. So I want to see that stay open. Small portion left open. That is a 27 candle. So this is a crazy Ivan time. I just want to see that 27 take that out, 30, 32 take that higher, and then I'm going to move my stop right to there, the bottom of 27. Gold is on a turn as well. So I got that one locked in. So 1, 2, 3, or both candles. Just got a wick above there. I like the body in this one here. I don't want to see us dip back down into here. If it does, then look for a retest of this level here. If it's really strong, I want to see that candle hold right there. And get resynced with my gold trade now. I just took that out. This here could come back and tag here, here, or here. So that could bring you all the way back down into here and still be bullish. So we'll take 1,000 out of that. So now I'm looking for a retest of this level here. There's a small little 5-minute SIBI right here. That will bring us right back into that candle's open. So come all the way back down there, give that a little kiss, and then I'll load up again on that to go higher. If we break through that and come back into it, then I'll close it out, because that'll be my no-go zone for a run back down through here. Keeping in mind that that 120 level, the bodies are respecting it right now. So far that wick has come back and tagged this old high here, right there. We'll see if it keeps pushing higher now. Yeah, someone has found Crazy Ivan's hiding place. Yeah. There's 30.32. So 38. Want to see 38? I'll get back down into here. Crazy Ivan does a run for you. Retest this down here and then send it up. That's a nice B level entry on a 15-minute chart. See, that's why D is looking at when he was wanted to go short. And then you see this on a 15-minute chart saying that's bullish. That's a bullish signal to go higher. So you're looking right here and you're saying, is there an opportunity to see a reversal off at that point? So when you look at this 15-minute chart, you see you have a higher time frame that says it's bullish. I want to go bearish. So now I look here to see if there's any chance on a 1-minute chart or a 5-minute chart to see a reversal. So that's the point right there. And you say it's right on a 19 candle. So there's 17, there's the squabblers, 18. Runs back through it and you go, if we get a break above here, I'm on the wrong side of this. This is actually going to keep going higher. So it breaks that high, comes back, you go, there's that level I'm looking for the swing. Runs above it. You can take it there. That way you're confirming now that whatever short you were looking for has now been, it's tipped its hat saying here's the fair value gap. If that gets broken to the upside, then we're looking for a continuation. And there it is right there. Breaks to the upside and takes out the second data point. Look for the second data point to hold. Run for the high, pay yourself, and let the rest run. And this, you're looking at a Model 3. If that's your entry, your Model 3 is still not broken, so you're still in that trade. So you're looking for this right here to not close below here. That's a Model 3, take profit Model 3. And gold's back into that range again, so I'm going to wait for gold to get back down into here. Clear out the highs, pay yourself at the highs, and then all of a sudden it starts to do this little pop through here, and you go, that's not good. Comes back, get out of your trade until you see it break through this level on the upside, and then take out the mean threshold here. So we're back inside a potential run in here, and here's your premium box from the old leg. There to there. That's the old premium box. and we're coming back into it. So I want to see if this pushes back through here, find some leverage on that, and goes higher. If it doesn't, then we're looking for 50% of this range. And then I'm looking for an opportunity to get long from here. Any opportunity to see a reversal, SIBI, entry, long. Where are we at? 38. There's 37. Last bit of crazy Ivan to 38. Retest this high here. Look at the mean threshold. Well, that high's been taken. Its mean threshold is right here. Look for this little guy right down here at the 5 minute. That'll put us back in here. Body's broken that. Look at this main threshold here now. That gets broken. We're looking for this. It's done. Look for the low now. So when you see this, then go to the 15-second chart and have a look at that for any reversal off of here. Start going higher. There's the tippy tap. Done. Now I want to see it reverse. So let's look at a 15-second chart here now. Retest, buy one. I want to be just below that. Watch this level here. You come down right into here. Wait for this to get taken on the upside. Just take out that little high there. About this one, tagging this one. It's got to get aggressive now, start taking off. I don't want to see it come back in through here now. Get up there. All right. We'll move that to break even. Let it run. So now we want to see if it eats through this one. And we can follow this up with a retest. Its chances are it's going to come all the way back into the mean threshold of that candle and tag me out anyway. Or that one. It's low. So I'm still up inside the, and there's a little tiny one right here. So just tag that. If you're aggressive, you want to get out of here. I don't want to see it come back anymore. It's worked this. So I'm being really precise over the level I'm looking at. So that's got to hold. Take out that high and I'll move to the bottom of that candle now. So now I want to see this hold. You can come back to here. It's mean threshold. And then I don't want to see it come back to the bottom. And it's likelihood that it could. And there you go. So now see how it's changing here? We got a candle right there, actually closed above that, and then went right through it back into this. Actually, there's nothing here. So that's how you stay on the data point and say, I don't want to see it go lower. Otherwise, we have that risk of us revisiting down here again. So very specific points you want to see hold. And if they don't, at least you've got your ass saved there. Oh, wait, what was that? That was the halfway point. There's the halfway point right there. So now wait for a little turn here on a 15-second chart. So you're right back here into this candle. We've got a body above it. It's 1, 2, 3. The last levels right here at 15-minute chart, 096 or 069. That'll put us right back into this discount box here. So if you're looking at a box to box trade, here's box to box. High, back to the low. So we're just over the 50% mark. Retest, send it higher. Now you want to see it get up here. You're welcome, Lucas. Take care, buddy. What's ES up to? ES has got to turn short back to the mean threshold of this candle, hit it, see if that holds now and sends it back through here and takes this candle out to go higher. If we eat through the mean threshold of that candle, then chances are we're going to fill the rest of this BISI, and the risk is for us to run down, take out these equal lows here. So keep your eyes on that little midpoint right there. That one. And there should be another one in here somewhere. Those two right there. Below it. Looks like a good one. Watch here. Didn't quite get 069 yet. We touched the edge of that. And we touched the edge of the, we did right there, right on the money. That is the edge of the, at 077. Now pop it up. Watch ES. See if ES takes out this, and then sends it up higher again. Watch the premium. Watch the bull trap. Looks kind of chopped now. Keep your eye on that mean threshold at 69. I guess we got this whole area we can play with. That puts us right down into the bottom of that, or right near the rejection block. It's holding price, eh? So the bodies are respecting that. Mean threshold is holding price right here. Little swing. First candle. Mean threshold. Wicks did some damage. I want to see this start climbing up above here now. Excellent. Get up on top of here. We'll see this hold now. And we'll see if this breaks. That's a full fill of that now. I don't want to see it come back through here. Mean threshold is holding price. The bodies are respecting that. Let's see if we pop below here again. And just one tick below that candle. This is a 15-second chart too, so I want to see this on the 15-minute chart. Hold, keep pushing higher. A 5-minute chart, you want to see that 5-minute chart. The body's respecting that. Hold, send that higher. We can come back and test this. I'm going to be just below here. Just below the next little spot right here. Come back, retest that. See, we've got a change in direction here, change in direction here. We came back up, tagged that short inside here. So this is a reversal inside this range now. There's nothing else down here other than this immediate rebalance, which has been hit. So that's got to hold. It is very choppy. And if you're not catching these little reversals for, hey, the signal is it's coming lower inside this range, right there, then, and I missed it. And then you got this one here. We've traded through it. Now I want to see it trade back through here, clear out this, and then get back in sync with going higher. If that is holding, that little data point there. Nope. I think gold's going to bail me out today. Once again, gold is going to be my little savior. If that goes up from there, that'll be like a kick in the nuts. It literally came down to the bottom of this candle, and then yeah, we'll see. Gotta hope for gold now to kind of take back some of the losses I took here this morning. You really got to keep your eyes on these changes. If it's not working, it's because I violated one of the rules. If that's a reversal and it trades back into it, you got to say, I'm on the wrong side of this. Now you're willing to let this drag lower inside that range and then say, and again, we're on a 15-second chart here, but that's an indication that we're coming back inside the range. So you look at 50%, 70% optimum trade entry reversal. So let's have a look at this whole thing here and see how far down that came. And if you're true to whatever time frame you're on, the rules apply to all time frames, right? Look at that, 75% optimum trade entry reversal. So let's see if that holds. Come back inside it. Wait for this side to get taken. That's the perfect spot for a long. If it's wrong, then as soon as it trades back into it, get out. You're on the wrong side of it. Takes out the high, move to break even. Now you don't want to see it trade back through there. That's why you're at break even right there. You pay yourself at the high. And now I know it's only a small one, but you're consolidating, right? So the rule is if that's the perfect place to enter right there, if it trades through it, trades back to it, that's your fail safe. You can get out before the lows are taken. And if it runs back through the high, pay yourself, move to break even plus the cost of the trade. And now you want to see this. You want to see this keep leaving. So you've seen this level get traded above. It traded back inside it. Now you want to see it break the high. Now use this. You want to see a body break that candle's high right there, not just a wick. And we're right in the mean threshold of this candle. See how that one's holding? This consolidation, if you're looking at specific data points. That's good. Now you're broken above it, and it's also broken above this high. So now your stop loss moves into here, and that is that one tick below that low. So you want to see that mean threshold hold price and send it higher. See? So perfect entry. You're looking at specific data points that support price, and then you're demanding that price give you what you want. And now you want to see this one break to the upside. On a close. So now your stop loss moves to this guy's low. And if that one gets taken out, see how this little imbalance got traded through? Your stop loss sits to that guy. The moment you break that one on a close, which you just did, tag, go higher. See right here? Now you want to look at this one. We want to see a body break above there. Actually opened and closed right on that level. Tagged it, and we're going higher. So you see how that perfect entry place we talked about? Some of you may just go, oh, that's just ridiculous. But if you look, if you know what specific data point you're looking at, and you go on top of a breaker or this, some other, whatever this thing is here, I'm not sure what that was. But you're sitting on top of that, inside this. Perfect place to say, well, I'm going to risk a long stop loss will sit here. As soon as it breaks the high, pay yourself, go break even. Good. Support. I'm looking for support. I'm looking for support. There's the support right there. Now you want to see that keep going higher, and you're constantly watching these areas right here. If we close below them right there, that would be a 3 out. If you're in this and you model 3, you'd be trading, closing out your trade right there as soon as it closed below that level. And then you wait for their next setup. Now wait for this one to let go, and this level right here. Can you see how that's like the perfect place as we talked about it, and you saw all the data points getting continuously tagged? Watch this level here now. No market structure shift. You've traded below it. You're back up inside it. This would be the perfect short right here. Stop loss would be like literally that close. If it runs through you, then get back in sync with a retest of this from here to here and continue looking for that high. So sometimes if you're on the wrong side of it, you just pay the extra, the new information that says you're on the wrong side, get back in sync and go higher. That short, the perfect short, takes out the low, move to break even, pay yourself at the low, and let's see how we're in this perfect short now. Inside that range. Look for a retest of this. Send it lower. That has the support price all the way up to its mean threshold. Takes out that low, pay yourself again, move your stop loss down further. You want to make sure it's just above. If your entry was right there for the short and you've taken a piece off here, you're putting your stop loss above the mean threshold of this candle, because we've already got that one's been retested, so you don't want to get that tested again. You want this to provide support, so you're going to be one tick just above this candle here. Because if this changes now, that now becomes the acceleration, that becomes the bull trap, that comes the premium, and then you want the premium to let go, the bull trap to hold, and then send it higher. So you're always looking at those data points as levels of support, and you're demanding price action from each one of those. Makes sense to you guys? Mean thresholds holding. Watch here. It's got to keep coming hard now. As soon as it takes out that low, pay yourself again and move your stop loss above here. Rejection block. So if your stop loss is sitting up here, you're like one tick above there, that takes you up. Watch right here. That would have taken you out right there if the spread was big enough to take you out. We revisited this here one more time. And now you want to see if a body closes above here. What's ES up to? See that level we're looking at here? Came right back inside it, sent it up, trade through the premium level, come back into that premium level, send it up higher, trade through the next premium level, come back into that premium level, send it higher, trade through this in here. So now the potential is for this to roll over and come lower. The ideal short is right there at 72.84. And then the stop loss will sit right there. So you're really tight with your stop. And then you want to see it roll over and come back down inside this range, coming back into here. it's through you. So before it takes your stop loss, you're kind of managing here. So your stop now moves to here. If it takes you out, it takes you out. You got to paste some new information here. Look for a retest back down in here. Continuation. You're out. NQ, look for a retest right here. We'll buy along there. We're just going to sit below here. This is really choppy now. I'm out there. It's not sitting nicely there. See, I'm below that level. Whoever keeps sending the love, I'm sending it right back at you. Thanks. So now I want to see this high get taken. See, this is kind of some things you got to kind of know about yourself. So kind of looking at the psychology of this now. I've been a little punch drunk here now. I've been hit a couple of times. Gold keeps bailing me out, but I've been punch drunk a couple of times here. And look at that level, still holding. Nobody's broken it yet, and we're going higher. And see how we bailed on it already? Instead of just trusting your level, your higher time frame levels, and the confirmation here, I could be risk-free right now. Gonna move that right to risk-free, paid myself one there, and then just let the rest run. So now we're looking for a retest of this, and then send that higher. Now you want to see this level. And one below here. And if this comes back and takes me out again, I'm done. There's the mean threshold right there. Got to hold. Not. Stabbed me, the little bastard. See that? Launch right through. So now we're looking for, we're back into this level again. If that holds, I'm clearly not watching clearly enough here, because this is a look here to here. If that holds now, I don't have the attention span I should, because that's where the stop loss should have been sitting. Yeah, I'm done too. I'll see you guys around 1 o'clock on the Telegram channel there. Thanks for tuning in. If you don't have the, I don't have the focus right now. I'm clearly got my mind elsewhere. I'm missing some key levels here. But you'll go back, you can go back over all the ones I've lost here, and you can see the rules were broken over and over again. That's why I'm losing them. Or they should be a smaller loss. So we'll see if this holds now, gets back through here, and continues to move this higher time frame premise higher. That 5 minutes still holding. So anyway, and I'm getting out of this 15-second shenanigans, and you'll look at how choppy that is. So know when to stay out, and I'm done now. So I will see you guys tomorrow. Have a great day. No, I won't see you tomorrow. Tomorrow's I'm in Manitoba tomorrow. I won't see you tomorrow, and probably not Friday. Depends on the surgery. So I will see you guys on next week, and you guys have an awesome weekend. Take care. Send them the love, my friends.